Good evening. I would like to take the opportunity to first of all thank you for sharing your evening with me. Tonight's LAPFCU presentation is in direct response to our members that have requested information on the topic of divorce and finances. If you find yourself contemplating or going through a divorce, we at LAPFCU do sympathize with your circumstance and want to empower our members in making informed decisions when going through situations that might have an effect on your financial stability. My name is Myra Kasuk, and I am the Financial Education Coordinator here at LAPFCU. The duration of this webinar is scheduled to go for 1 hour and is being recorded. This is an interactive presentation that at times might require your participation in the form of you either raising your hand when I ask a question or asking questions at the end of the presentation. For those attending a webinar for the first time, please allow me to draw your attention to the GoToWebinar toolbar that was launched when you joined the presentation. If you locate your name in the toolbar, you will notice a series of icons, one resembling a hand. Please click on the hand icon. This is how you will raise your hand when I present you with a question. So at this time, just so I can make sure that all of you can hear me, if you can hear me, go ahead and click on the hand icon. Okay, perfect. Thank you. To lower your hands, simply click on the hand icon again, or you can wait for me to lower the hand for you. In the essence of time, all questions will be addressed at the end of tonight's webinar, as many of your concerns might be answered within the presentation itself. Because all of your questions are important to us, please feel free to jot down your questions during the presentation so that you do not forget to ask it at the end in the event it was not already addressed. Our goal is to provide you with very basic information on things you will need to consider if contemplating a divorce. Please keep in mind we are not lawyers, we are not accountants, and we are not experts. But what we do have is a basic understanding on how to deal with finances in every type of life change. With that being said, a divorce is one of the top 5 life stressors, and a lot of people don't realize that. So it is definitely something that we want to continue to assist you with, especially with dealing with your financial matters. The first step, with that being said, is that we're going to cover the first steps when getting a divorce, as well as the financial process of preparing. We also will cover how to untangle combined accounts, your credit-related needs, as well as some financial strategies for people with kids. Okay. One of the first steps is having the discussion. So one of the things I want you to think about is, have you talked to your spouse about ending the relationship? Have you considered where you will live? Would you like to stay in the home? Are you going to sell it or move to another place? If you have children, ensure that they are your first priority. Have you thought about them? And finally, are your finances complicated? If so, do you need an attorney or a mediator? And I'll talk to you a little bit about that as we get further on within the presentation itself. If a divorce is something that's impending, then it is definitely time for you to change your attitude and outlook on your credit and finances. Soon you will actually be on your own with no partner to share in these expenses, and a lot of people forget about that part. Getting your house in order by organizing all of your financial documents. That includes your bank accounts, credit lines, any insurance you may have, as well as loans and tax information. Make sure you have your balance transaction statements, any contact names, addresses, and phone numbers for your bank accounts or credit cards that you have handy. Okay. Any type of balance transactions and statements that you have, that type of information you want to make sure that you have on hand to help you through this new and frightening experience. Consolidated Credit put together a couple of steps to ease the stress and make this transition as painless as possible. This slide shows some additional items to have in order. So you want to make sure that you have any type of brokerage statements, if that applies to you, Social Security information, business interest, medical coverage, as well as pension funds. These are just a few items in addition to obtaining your tax information as stated in the previous slide. Another thing to ask yourself is, do you need to change your insurance? Home, auto, life insurance. Many newly divorcees fail to update their life insurance policies, leaving their ex as the beneficiary in the event of their passing. With that being said, ask yourself, do you need to update your will or trust? Do you have marital assets, any type of, whether it's artwork, antiques, safe deposit boxes, or inheritance that may need to be considered? The other item that you may want to think about is your home paid off? If not, who will pay the mortgage? Frequently, one spouse is responsible for maintaining the couple's bank account and or paying the bills, while the other spouse may be in the dark. So make yourself aware of what's going on as soon as you can. It's really not a surprise that a lot of times the spouse that knows the least about joint assets is the one that's at the greatest risk financially. To avoid being taken advantage of, try to collect as much information as you can before the divorce is even discussed. Make sure that you make copies of bank statements, any type of bank account records, credit card statements, as well as tax returns. Protecting yourself by storing copies of relevant documents in a safe place is essential. So if you don't have a safe deposit box, if you have a trustworthy friend that you can rely on to keep that information, or if you're already currently working with an attorney, keep those items at an attorney's office. Before filing for divorce, you should create a list of all your personal and joint accounts. So keep in mind that there are two different types of credit accounts. You have individual as well as joint. When you apply for credit, whether it's a credit card, a bank loan, or mortgage, you'll be asked if you want to open it as an individual or a joint account. So let's take a look at what the differences are and why, if you have a joint account, it's essential for you to pay attention to this part of the webinar. If you have joint credit accounts while you are separated or in the middle of a divorce proceedings, you want to make sure that you ensure that the regular payments are being made. You can request a credit report to ensure you haven't missed any accounts in compiling your list. So remember, as long as there is an outstanding balance on any joint account, both of you and your spouse, are liable for it. Okay? So again, this is if you have a joint account. Here at the credit union, we have had situations where a member gets remarried. And unfortunately, they got remarried and the person passes away. But the first wife was still listed as the beneficiary. If you can imagine that situation, it's not very pretty. You have your ex-wife listed as the beneficiary. You have passed away, and now the ex-wife and the new wife are now trying to go to court to figure out what's happening with these funds. So as a reminder, I cannot stress how important it is to update your beneficiaries and ask creditors to close joint accounts. Try to convert or reopen the account under your name only. Joint accounts are the responsibility of both spouses. So even if you go to court and a decree is set that basically asserts that one spouse is responsible for paying off all of the joint accounts, creditors are not a party to that divorce agreement. So it is your responsibility to to see that your spouse fulfills his or her obligation under that decree. Let's say, for example, your ex makes charges on a jointly held credit card and then refuses to pay the balance. It will show up on both of your credit reports, and it could prevent you from getting additional credit loans. Your credit will suffer if your joint accounts are not paid off in a timely manner. So if it's not paid every month and you're on that account, you will actually suffer that reporting as well. Asking your creditor to remove anyone that has authorization to use the card once it becomes your responsibility is a way to protect you from a vindictive ex charging up your credit card, which can put you in massive debt. So again, these are some things you want to pay attention to that some people tend to forget when they're filing for a divorce. In the event that there is no way to separate the accounts, you can specify in the divorce decree that your spouse notify you if a monthly payment is going to be missed. The good thing about that is it's a way of hopefully making sure that you can make that payment to prevent damage done to your credit. If your spouse is not financially responsible, unfortunately, this may become a monthly hassle for you, but it must be done in order to protect your credit. Once the debt is paid off, you can close the account for good. So let's talk a little bit about community property. If you live in a community property state, so for example, if you're in California, you're in a community property state, both spouses may be liable for the debt of one spouse. And those debts may appear on each spouse's credit report. So be sure to check the regulations for each individual state for any differences. A good way to keep up with your credit as well is to remember that you are still responsible for all joint accounts unless they are closed. And if your ex-spouse missed a payment, lenders will record the negative information on your report. As a result, your credit score can be damaged, hindering you from opening new individual accounts once the divorce is over. The Fair Credit Reporting Act, also known as FCRA, requires each of the nationwide credit reporting companies like Equifax, Experian, and TransUnion to provide you with a free copy of your credit report once every 12 months. So that's very important. If you haven't been pulling your credit, it's really important for you to be aware that you can get a free copy once every 12 months. The slide that you see on your screen now is an example of a credit report from Equifax. So I'll leave it on the screen for a moment. Take a close look at your report to make sure there are no errors. And you'll notice that on this report, there are a number of different sections, which I will break down very shortly. Again, you want to make sure that the information is current that's on there and that you look at it and make sure that there are no disputes. And I'll talk to you a little bit about how you would dispute items on a credit report as well. So once you apply for a loan or a credit card, your credit report is created. Banks, credit card users, landlords, even potential employers can legally review the information on your report. Your credit report consists of four major elements. Your personal information, your credit history, inquiries that have been made, as well as consumer statements. Okay, so those are the four major elements that will be within a credit report. The personal information section includes your name, current and previous addresses, your spouse's name, your date of birth, as well as your social security number. Although these factors are not used in credit scoring, updates to this information come from the information that you supply to lenders. These are your credit accounts. So lenders report on each account you have. So any account that you have established with them, they report the type of account. So if it is a bank card, it could be an auto loan, a mortgage, they're going to report on that. They'll also report the date you opened the account, your credit line or loan amount, as well as the account balance and your payment history. So think about it as if you were loaning money to a friend. If that person didn't pay you back, and another friend of yours, you have a mutual friend, and they wanted to borrow money from that person as well, if they heard that they didn't pay you back, chances are they're not going to loan them money either. We'll look at your credit report as a way that lenders communicate to each other. Because they don't have a history with you, they basically pull the credit report to see how likely you have been to pay other people back. When you apply for a loan, you basically are authorizing your lender to ask for a copy of your credit report. This is how inquiries appear on the report itself. The inquiries section contains a list of everyone who has accessed your credit report within the last 2 years. The report you see lists both voluntary inquiries, and these are things that are generated by your own request for credit. And then it also lists involuntary inquiries, such as when lenders order your report so that they can make you a pre-approval credit offer in the mail. So what kind of errors are typically found when you have your credit report? Your name could become mixed up with someone else's, and you could begin seeing some of his or her accounts on your credit report. This will affect your credit either positively or negatively, depending on that person's payment history. The most common errors include identity, account details, as well as fraudulent accounts opened in your name. So if you pull your credit report and you notice that there is a dispute, what can you do about it? Just at this point, because I would like to kind of get some feedback from all of you, by a show of hands, how many of you are used to pulling your credit report at least once a year? Okay. So I don't see a lot of hands going up. For those of you that did raise your hand, great. For those of you that did not, it might, especially right now if you're contemplating getting a divorce, it is something that you want to get used to doing. Again, please remember that those 3 credit reporting agencies, they are free once a year, and I'll go over how you can obtain that information as well. If you find that there's an error on your report, you can dispute it with the credit bureau. Some people prefer to go directly to the reporting source, which in most cases is your bank or the lender. What you would need to do is get a copy of your credit report or reports containing the error. Gather supporting documentation for your case and write a letter to the appropriate credit bureau. And in that letter, you're going to describe your specific dispute. Okay, so for example, it says that you owned a house and I don't know, you owned a home, and depending on how old you are and what year you it's reporting, maybe you weren't even eligible to get a home during that time. Whatever you're disputing, please make sure that you're very specific in regards to that dispute. Make it clear and concise. After you've made a copy for your own files, send the letter to the credit bureau. The credit bureau is legally required to investigate your dispute and will typically do so within 30 days of receiving the information. If your bank or lender is reporting incorrect information to the credit bureaus, or if someone else opened an account in your name, start by contacting your bank or lender, the information provider that supplied the information to the credit bureau, and find an email address or phone number and make notes of any conversations you have had with a representative. Sometimes talking directly to your lender can facilitate the dispute process. Once you are divorced, you will need to establish your own credit. If you don't have a credit history, you probably won't qualify for a regular credit card, so you'll need to try alternatives. A credit card is convenient when you are renting a car, making reservations for a hotel, or even getting your telephone or electric turned on. Otherwise, you'll be paying a large deposit to the phone or electric company. An installment loan, for example, you can look at that as a car loan that you pay off in 2 to 5 years. Some people opt for a secured credit card, and this is the type of card that allows you to borrow against that amount. You can only borrow up to the amount that you deposit into the account, and those payments are made on a monthly basis. So let's talk a little bit about tips to get you back on track with your credit. Because a lot of people don't realize, again, that once you start the divorce process and you are officially divorced, you need to keep in mind that your household now has less income. Now, it's not the time to start pampering yourself, as many of you will find out, because you'll be starting all over from the beginning. Someone will need to buy another bedroom set. So assuming that whether you had kids or not, if you have only one bedroom set and you get divorced, someone's going to need to buy another bedroom set. Appliances, and if you do have kids and the furniture is staying in one home, not the other, someone will also need to buy kids' furniture, etc. So what you want to look at is diversify. If possible, and if you qualify, take a small personal loan. You may be able to use it to improve your home or make an investment. Either way, making timely payments on it creates a credit history. Don't take out a loan, however, if you cannot pay for it. So as long as you have the means to show that you can pay it back, then it's definitely something that will be beneficial to you. However, keep your debt to a minimum. Again, this is not the time to go out pampering yourself. This is all about credit utilization. It sounds technical, but it's the amount of debt that you have compared to your total available credit. So that's definitely something that you want to keep in mind. Make your payments on time. Lenders won't look too kindly upon it if you miss a payment, things of that nature. And then keep in contact with your lender if you can't make a monthly payment on time. Ask them about alternative payment arrangements that won't damage your credit or raise your interest rate. Never ignore your lender. To avoid scams, the U.S. Federal Trade Commission gives these tips to avoid fraud. Don't give your account number to anyone on the phone unless you've made the call to a company you know to be reputable. Carry your card separately from your wallet. And during a transaction, make sure that you keep your eye on your card and make sure that you get it back before you walk away. Never sign a blank receipt. Draw a line through any blank spaces above the total. Now, to some of you, this may seem like elementary because you've been doing this for quite some time. However, once you get divorced, if you want the person that has been in the habit of paying bills, this might be something that you need just a little bit of a reminder about. Save your receipts. This helps to compare with your statements. Open your bills promptly, a great practice in identifying potential fraud as well. Check the online credit bureaus once a year. It's free. And reconcile any purchases that have been made. And don't forget to immediately report questionable charges. By a show of hands, how many of you have already started creating a budget for yourself? Okay. Okay, so quite a few of you have started to create a budget for yourself. If you haven't started working on a budget, Coffee has some great tools to get you started. Coffee is a program, it's a service that we have. You can find it on our webpage, and I'll give you additional information on that towards the end of tonight's presentation. They have over 100 videos and webinars that offer ways to build a budget, maximize your financial future, as well as provide you with personal assistance. Again, I'll provide the link to you to get started at the end of tonight's presentation for those of you that are interested. Those of you that raised your hand that you have already started the process of creating a budget, it would be a good site for you to go to as well, as it also gives you a ratio. You can input some numbers, and it'll give you a ratio of how you're spending and what you're spending a lot on. And it'll provide some tips as well on how to better manage your funds if you're not doing so already, or just provide you some additional tips to help you in what you're already doing. As I stated earlier, your finances are about to change. So first, you'll need to know what your monthly income is going to be. If you were not the provider, you need to ask yourself, where is this money now going to come from? Will you need to get a job? Is it something that is going to be supplemented through alimony? These are some things that you'll need to ask yourself. Once you know how much you'll be bringing in, you can gather all of your bills or any invoices and determine what your expenses will be. You have three types of expenses. Your fixed expenses include rent, mortgage, any type of car loan. These are items that do not change on a month-to-month basis. The second type of expense that you could have is a flexible expense. Flexible expenses also happen on a month-to-month, but there are more things like your utility bills. It could be a cable bill, cell phone bill, even groceries. Although they're items that you might pay month-to-month or every other month, they have the ability to change, hence the term flexible expenses. And lastly, you should be taking a look at your discretionary expenses. These are things such as movie night, dining out, hobbies that you might have, you know, all the things that actually make us smile, okay? So the things that we really like and all those fun things, those are called discretionary expenses. What you are going to do is you're going to subtract your expenses from your income. If the number comes out to be positive, that's perfect, that's great. That basically means that you have a surplus. And the surplus is you have a little extra each month. So you're able to not only pay your bills, but have a little extra left over. That would be the ideal situation. However, when people go through a major change, a lot of times the number tends to be negative. And what that means is that you are spending more than you actually bring in. In that case, you're experiencing what is called a deficit. If you have a negative number, once you subtract all your expenses from the monthly amount that you bring in, what you will need to do is take another look at your expenses and see what you can change and or cut out, at least until you start bringing in a little bit more cash flow. What you can start by taking away from is, unfortunately, those discretionary expenses. So all those things that I said that, you know, make us smile and make us happy, those are great. But start looking at, do you really need to do that every single month? Can you do it once every other month? So you'll start taking a look at those discretionary expenses first. Maybe you stay home and order a movie instead of going to the theater. And there are tons of online tools. Again, you can go to the Coffee website, which I'll be supplying you with later. And there's a lot of different worksheets also online. If you have Excel on your computer or laptop and you type in budget, there's a lot of worksheets that are on there as well that you can definitely use to assist you in this process. If you're trying to make the mortgage payment, retirement savings may seem like an unattainable goal. But what you need to keep in mind is that you need to save something, even if it's only $20 a month. Many people fail to think about retirement when going through a divorce. You might have been under your spouse's retirement plan. So there are some laws that are out there, and you need to ask yourself, are you entitled to any of those retirement funds? Do you need to change your 401k or IRA holdings? If you have questions regarding your investments and would like to talk to a licensed professional, I will include the information for our CUSO Financial Services rep after this presentation has ended. Now, when we were creating the budget, and I was talking to you a little bit about how you would actually look at your budget to see if you have a surplus or a deficit. With only one income and bills to pay, trying to save money for retirement or even emergency can seem unrealistic. But the reality is the roof is going to leak, the car is going to break down, the refrigerator stops working. I mean, the reasons I can come up with are endless. And if you don't have the funds or at least a credit card, you have to ask yourself, what are you going to do? And one of the things that, you should be thinking of now before you even get into that situation is reevaluate your expenses and start putting money aside so that you have at least 3 to 6 months of income saved. Now, earlier I said, even if it's $20 a month, you have to start somewhere because, again, these things are going to break, and now we're going to be working on one income. So, again, I want to stress, we are not lawyers. We are not accountants. So, talk to your tax advisor about filing head of household, exemptions that you may be able to claim for you and your child, earned income tax credit, child and dependent care credit, as well as child tax credit. There could be some things that you could definitely benefit from, but you would need to talk to a tax advisor regarding that type of situation. The more knowledge you have, the more prepared you will be. So once you are divorced, you might have to pay for health insurance. Again, depending on who held the insurance in the relationship, although the court could order your spouse to continue to pay for health insurance, that's not a guarantee. You can research free programs that are out there. If you have a child, you may qualify for coverage through Medicaid. There's tons of free programs that are out there. But again, these are some of the things that slip through the cracks when we start thinking about divorce and our finances. And a lot of times people forget who was actually paying the insurance. How am I going to pay the insurance now? Do you need to add your children onto your plan if they were on your spouse's plan? And you can also talk to your human resources department about that and see when you can actually start adding. Do you have to wait until the end of the year, or does this constitute a life change where you can make that change immediately? Please keep in mind, if you have children, their welfare comes first. Start developing a financial strategy for your family. Again, I can't stress this enough, Coffee has some great budgeting tools. Don't forget to incorporate cost for daycare, medical, school, and insurance. So a lot of you already stated that you have already been working with tools on doing your budget. And when I asked about your expenses, are these some things that you've already calculated in? Do you have a young child that needs daycare when you go to work? Were you the person taking care of your child before? Does your child go to private school? Is there a tuition that now needs to be paid? Well, you need to take them out of private school to put them in the public school. These are some things that you'll need to consider. Once again, talk to an accountant or financial advisor about taxes and child care credits. For additional membership questions or concerns involving your finances, I have basically put on your screen our toll-free number. You can visit us at www.lapfcu.org. As a reminder, we provide access to financial coaching and tools via the Coffee website, which can be accessed from the LAPFCU homepage or via their URL provided on the screen. In just a moment, I will open up the webinar for questions, but I wanted to remind you that this session is being recorded, and a link to the video as well as a survey will also be provided to you within the next 2 business days. The link provides you with access to rewind the video, pause, as well as take notes at your leisure. So rushing to jot down the information is not necessary. In addition, I will also be sending out a survey which you can use to request a call back, as well as let us know what you thought of tonight's presentation. And, oh yes, you can also put what you thought about me as the presenter. Christopher Ellis is an experienced finance and education professional with an MA from Loyola Marymount University. He holds a Series 6, 7, 63, and 65 license, and he has hosted many retirement and investment workshops for the credit union. I have his information on your screen as well. His phone number is 818-464-2070. Once again, that number is 818-464-2070. If you have questions and or concerns regarding any type of investments and your investment needs, your 401k, IRAs, Christopher is definitely the person to call. He's a very trustworthy source here at the credit union. Now, as far as obtaining a lawyer, litigation that is court-based can easily cost more than $100,000 and can take up to 2 to 3 years, which can put a tremendous financial strain on most families' finances. Mediation can actually help parties work through the divorce process generally for less than $10,000. Barry Davis is a mediator, and he trains on this particular subject matter. If you are interested in speaking to him, I have also provided his information on the screen. You can reach him either by email or phone number at bdavis@davismediation.com, and his direct line is area code 310-483-3373. Once again, his email is B for Barry, Davis, his last name, at davismediation.com, and his direct line is 310-483-3373. As I begin to open the webinar for questions, let me remind you, we are not lawyers, we are not accountants, nor are we mediators. But as I basically stated in the beginning, we can provide basic information in an attempt to make your new life a less stressful transition. If you have a question, simply click on the hand icon on the toolbar. So raise your hand so I know that you are typing something in, and just begin typing your question in the question pane. To make sure that you all know where the question pane is, can everyone just test it out and just type in yes if you understand, and if you don't type anything in, I guess you don't know where it's at. So just type in yes, I understand, so I can make sure that you know where the question pane is. Okay, I see I have one yes. Perfect. Great, great. Thank you so much. Okay, so I'm going to go ahead and open the line now for questions. So if you have a question, go ahead and type your question in, and I'll respond. Okay, so the first question I have is, what other states are considered community property states other than California? And to answer your question, it would be Arizona, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, Wisconsin, and Alaska. The next question I have is, can I remove myself from a joint account without my husband initiating it? For that question, it really depends on where your account is held. So for example, if you are with the credit union, the only way to remove yourself from a joint account is if someone actually passes away. For other institutions, you would need to check with that institution. And if you are the primary. So for example, if your account is in good standing and you took the money out and then want to open up an account, you would need to be the primary. If you're not the primary and you don't already have an account with us, that person would need to sponsor you in order for you to open up an account. Next question I have is, does a divorce affect my credit score even when I build credit on my own? We never had any property or debt in common. The divorce, as far as affecting your credit score, really would depend on if you have any accounts together. If you built your credit on your own, I mean, your credit score can change on a constant basis. So as long as you are making your payments and everything is up to date, your credit score would be fine. However, if it is a joint account, and the other person is the one responsible for making those payments, it could have an effect on you. So again, it really does depend on what type of account it is and whether you're keeping it up to date. If you keep it up to date, you should be fine. The next question I have is, can joint checking or savings account be closed with only one account holder doing the closing? Again, it really does depend on where the account is held. Here at the credit union, you're not able to just close the account if it's joint unless the other person has passed away. Some institutions, if your account is in arrears, they won't allow you to close a joint account. It's basically saying to a creditor that I want to be off because now this reports negatively on my credit. Most companies may allow you to. Again, you'd have to check with those institutions if the account is in good standing. Next question is, if the account was closed and this has happened, who do we notify? Again, it would depend on the institution. The account would not be closed here at the credit union. Because again, we wouldn't close a joint account unless the other person was deceased. Any other institution, you would need to talk to them regarding their procedures, their policy and procedures regarding that. If this is something that you have a specific concern about, when I send out the survey, you can definitely send me that information. I can do my best to find out an answer for you. And then your response was it's at LAPFCU. If it was closed at LAPFCU, we can talk about that offline because, again, my understanding is a joint account cannot be closed if the other party is still living. Okay. You're welcome. And I have another question that came up. Do you have a phone number for the credit reporting agencies? And the answer to that is the best way to contact them is online and via email. However, Equifax, once you log into their member center, you will be provided with a confirmation and telephone number. Equifax is available 8 a.m. to 8 p.m. Eastern Time. For those of you in California, that means that they're 3 hours ahead. So it would actually be 5 a.m. to 5 p.m. if calling from California, Monday through Friday. Experian, however, is available 9 a.m. to 5 p.m. U.S. time zones, Monday through Friday. And again, they prefer you to contact them online, but their phone number is 888-397-3742. And again, Experian is 888-397-3742. And for those of you interested in a number for TransUnion, it's 1-800-916-8800. Again, that's 1-800-916-8800, and they're open. They would take calls 8 a.m. to 11 p.m. Eastern Time, so that would be 5 a.m. to 8 p.m. if you are in California. Please remember, again, to keep everything in writing. It will help you if you're disputing any type of reporting. All agencies do speak English and Spanish. Okay. And let's see, do I have any other questions that are coming through? Okay. Remember, a link with the survey and video will be provided to you in the next 2 business days. I just want to make sure if you have a question, just raise your hand to let me know that you're typing so I don't cut you off. Okay, so I will send out a link with the survey and video. Again, that will be provided to you within the next 2 business days. If we have no more questions, again, I'd like to thank you for sharing your evening. As a reminder, we are here to assist in your financial needs during this transition. My name is Myra Kasuk with LAPFCU. Until next time, have a good night.